Hi everyone, in this video I'm going to answer the question, which stock is a better buy, Home Depot or Lowe's? The home improvement retailers have been thriving since the pandemic onset, so let's look at which one is a better buy. I'm going to look at a few different metrics here to measure the two and evaluate their differences on some critical performance measures here. And so let's start with annual year-over-year revenue growth, and I have Home Depot in the purple and Lowe's in the orange here. And if we look back all the way to before 2014, we see it's a pretty close battle here between revenue growth year over year. Only in the most recent year do we see Home Depot with a big advantage over Lowe's, but overall relatively close. Home Depot wins in a few years, Lowe's wins in a couple of years. So I would say this is a slight advantage to Home Depot here, but I would say slight, not a large margin of advantage here for Home Depot in terms of revenue growth. For both companies, solid revenue growth and slight advantage for Home Depot. Let's look at the next metric, which is critically important as well, which is the operating profit margin TTM, which is trailing 12 months. Again, going back before 2014. And here is a clearer advantage for Home Depot in each and every year going back before 2014. And most recently, nearly a 260 basis point advantage in operating margin, and clear advantage here to Home Depot as the winner in operating profit margin. The next metric I will look at is cash flow from operations to sales, and again TTM, trailing 12 months. And this is important because it tells me how much of sales does the company turn into cash flow, right? How much of revenue turns into cash? And looking back again, going before 2014, and again a clear advantage for Home Depot for the 10 years until the most recent year where Lowe's takes a slight advantage against Home Depot. But overall, looking back, you can see that Home Depot has an advantage in this metric. They do a better job of turning sales into cash, and that's an important characteristic. If you're a stock market investor, you want a company to turn those sales into free cash flow. And looking at the next metric, which is the inventory turnover multiple. This is a critical metric when you're evaluating a retailer. You want to know how good they are at bringing in inventory, selling it, and rinsing and repeating over and over again. And here we have again a clear advantage for Home Depot going back before 2014. They have done a better job at turning over inventory than its rival Lowe's. And this is also a multiplier effect in terms of the advantage for Home Depot over Lowe's, because Home Depot also held a higher operating profit margin. Usually, when you're looking at retailers, when they have a higher turnover ratio, they tend to have a lower profit margin, right? Because they're able to sell products more quickly because they're selling them at lower prices, generating lower profits. And so, yes, they will have a higher turnover ratio, but that will come at the expense of a lower operating profit margin. That's not the case for Home Depot, which is incredibly impressive. Not only do they have a higher inventory turnover, but they also have a higher operating profit margin. So that is a multiplier benefit for me in terms of when I'm evaluating Home Depot compared to Lowe's. I give them a double benefit here. Not only do they win in terms of the inventory turnover and operating profit margin, but they get bonus points for me for winning on both of these metrics. Finally, let's look at the valuation. And since both companies are profitable on the bottom line and generate positive free cash flows, I chose to use the price to earnings ratio and price to free cash flow to compare the two. And when we look at price to earnings, Home Depot is selling at a slight premium valuation of 21 selling at a price to earnings of 21 compared to 19.5 for Lowe's. And then if we look at price to free cash flow, Lowe's is selling at a premium of 29.48 versus 21.7 compared to Home Depot. So looking at them together, price to free cash flow and price to earnings, it you know they're relatively equally priced, right? Because Lowe's is selling at a premium if we look at price to free cash flow, and Home Depot is selling at a premium if we look at price to earnings. If we bring them both together, we can say that they're trading relatively equally in terms of valuation. One is not more expensive than the other when we look at these two metrics, so equally priced in valuation terms. So now it's time to answer the question, which of these two is a better stock to buy right now? And I would say, well, before we get to that, this is the time where I would recommend you to follow me and subscribe to my channel, because this recommendation won't be static. This might change over time if the valuations change. If there's some critical changes in the metrics, then the recommendation will change. And if you're a subscriber to my channel, you'll get those updates, because these are two companies that I follow closely, and I make updates on these companies all the time. So you'll get those updates. Okay, so without further ado, now let's answer the question, which is a better buy right now? And I would say Home Depot is the better stock to buy right now by a wide margin. By a wide margin, because Home Depot beats Lowe's in a number of different important metrics, and at the same time, it's not trading at a much of a premium valuation to Lowe's, which I believe it deserves. But it's not trading at that premium valuation. Meanwhile, its performance is considerably better than Lowe's in terms of operating profit margin, in terms of inventory turnover, in terms of cash flow to sales, all of them beating Lowe's, and it deserves a premium valuation. It's not getting one right now from the stock market. And so if you were choosing which one to buy, I would say Home Depot is clearly a better buy right now. Go with Home Depot stock. It's a great investment for long-term stock investors. Okay, so that's all I've got for this video. Thank you for tuning in, and I will see you next time. I want to thank the Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for all investors of all skill sets and risk levels. So I'm proud to partner with the Motley Fool to bring you 10 stock picks from their popular product, Stock Advisor. Stock Advisor has beaten the market by more than 3 times. Go to fool.com/Parkev to get your 10 stock picks now.